The S&P 500 is hitting new all-time highs again. CNBC's flashing red tickers, your group chats yelling, "The crash is coming," and everyone suddenly becomes a financial guru. But here's what nobody tells you. If you had invested at every all-time high in history, every single one, you'd still be richer today than 95% of investors waiting for the perfect dip. Crazy, right? That's why in this video, we're answering one question. Should you still buy the S&P 500 now or wait for a major crash that may never come? Stay with me till the end, because once you see what the numbers say, you might realize that waiting could actually be the most expensive mistake you'll ever make. This is Real Wealth Hack, and today we're decoding the truth about buying at the top and how it can still make you rich. Every investor has that moment. The S&P's breaking records, your portfolio looks good, but your gut says it can't keep going up, right? It's totally normal. Nobody wants to buy at what feels like the top. But here's the crazy thing. New highs happen all the time. Since 1950, the S&P 500 has hit over 1,300 all-time highs. So if you waited for a dip every single time, you'd spend most of your life waiting. That's like refusing to drive because gas prices might drop next week. Okay, let's look at the figures. Data from multiple market studies shows that investing at an all-time high gives nearly the same 1, 3, and 5-year returns as investing on any random day. And here's the kicker. In the past 5 decades, the S&P 500 has never been lower 5 years after hitting an all-time high. Never. That means every time people said it's too late, long-term investors just kept compounding quietly. So if you're buying for your future, not for next Friday, those highs don't hurt you. They actually help start your compounding clock. Let's be real, the S&P 500 isn't some meme coin that pumps and dumps. It's 500 of the biggest US companies: Apple, Nvidia, Microsoft, Amazon, Tesla, you name it. When you buy something like VOO, Vanguard's S&P 500 ETF, or SPLG, you're buying a slice of America's corporate engine, and that machine has been printing wealth for decades. Even at highs, these companies are still growing earnings, innovating, hiring, and expanding globally. The market's not expensive. It's just doing what it's always done: go up, take a breath, and go up again. Now here's the trap. Most investors say, "I'll wait for a dip." But guess what? Dips don't send calendar invites. Historically, there's only about a 9% chance that the market drops more than 10% within a year after hitting an all-time high. So 91% of the time, you're sitting on cash doing nothing, while everyone else is compounding. Waiting for perfection kills more wealth than any crash ever did. Here's the move. Instead of trying to outsmart the market, here's a plan that wins no matter what happens next. Step 1. Decide your time horizon. If you're investing for 10 years or more, highs don't matter. Step 2. Use dollar cost averaging. Drop a set amount into VOO or SPLG every month. You'll buy highs, lows, and everything in between. That's the secret. Step 3. Keep costs low. ETFs like VOO charge just 0.03% a year. SPY charges 0.09%. That difference might sound tiny, but over 20 years, it can mean thousands of dollars back in your pocket. Step 4. Stay put. The people who get rich from the S&P 500 aren't the ones who timed it, they're the ones who stayed in it. Here's your real wealth hack for the day. Stop worrying about when to buy. Start worrying about how long you'll stay invested. Because the people who get paralyzed by fear of highs miss decades of compounding. Think of it like planting a tree. The best time was 20 years ago. The second best time is when you stop overthinking and grab a shovel. If you believe in the long-term growth of the US economy, the S&P 500 isn't a gamble. It's a partnership, and that partnership pays off the longer you stay loyal. So, what's your move? Are you waiting for the next crash, or are you ready to own a piece of the 500 companies running the world? Drop a comment and tell me, buy now or wait for the dip. And if this video gave you real clarity, hit that like button, subscribe, and turn on notifications so you never miss the next real wealth hack breakdown. Remember, wealth isn't built in panic, it's built in patience. This is Real Wealth Hack, and I'll see you in the next one, where we don't chase hype, we build wealth smart.